Hi, welcome to the Market Alert for Monday, 9th of April 2018. We've got the pound to start off with. Market fairly quiet, which you'd expect. It was waiting for the non-farm payroll figures, and when they were released, you can then see the market's reaction as the dollar moved lower and the pound moved higher. And if we just switch over to here, you'll see that they were forecast at 188, 326 before, and they came out at 103, which is way off the mark, and of course not what they were hoping for, but it is what it is. It was 103, and I'm very surprised by this. When I actually looked at the numbers when they were released, I thought we would have had some form of rigging, but we didn't. So the market then moving higher in the pound. We'll come to the Dow in just a second. And in the daily chart of the Dow, we're sort of breaking out of this sort of consolidation area that we've got here. Prices need to drive higher. We need to maintain and stay above the 140 level if prices are to attack these 76% areas, and also of course the recent high where the market has pulled back from. News today, just the one item. We've got the Halifax HPI. This is forecast to be slightly lower as well, but still on the positive side for house prices there. And then in the Dow, we go to Friday first. A very volatile day. Lots of signals on Friday, lots of trades, lots of profits. The market higher initially. Actually, we just go back. This is the market's reaction to the non-farm payroll. Down, see some selling, then the buying comes back in. Nothing happens until we get to the start of the session, and then you see the buying come back in, and then the volatility kicks off. We then had some selling coming into the market. As you'll see here, we've got the first trade there, the market moving sharply lower, continuing to move lower all the way down until trailing the stop. The market is taken out down here. Let me just redo that without extending right so you can see it. 50% trail. I'm still there. There we go. And 24,163 down from 24,370 there, and then this continued as the session rolled on. Just get rid of that, and then we had a bit of a dead cat bounce here. You can see that there, but even so, the market still moving up at least. I wasn't around when this was happening. Well, we got 84 points there, the market higher. That's the range from the entry price to the peak. And then of course we had the return of the sell-off in the evening. And again, once you've gone through the scalp level on decent range, you can then trail the stop on the lower highs until you work your way all the way down until you stopped out here. And again, you can see there's several hundred points for this trade into the end of the session as well. Incredibly volatile, as you will see from the daily chart there. However, what was interesting here, if you wanted some downside targets, these were drawn in on Friday, 76%, 2369, and then we've got the upside target where the market found a bit of resistance and sold off as well. This line was also drawn in on Friday, the market coming back and sitting at this crucial area. I would have expected a bit more volume for Friday. We haven't got that, but however, we have got the market coming off those lows and attempting to move back towards the upside. So what I will do here is come to the top of this bar, just this bar alone, and click in there twice, and that's where the market's likely to find some resistance at the 24,234.1 area. So that's how the Dow's looking at the moment, but it's certainly below the 20 bar average and looking rather bearish at the moment. So any sort of bounce to the upside is going to offer on the short side some good trades as well. And this volatility is being maintained as well, as we'll see here. We're gone from 17 on Thursday, 17.22 to 1988, given the huge range on Friday, or during Friday's session there. And finally in Bitcoin, this pulling back a bit over the weekend. So you can see Saturday and Sunday both up days, and the trend being broken slightly, but no volume here. So I would expect a resumption down to this level. Again, the classic dead cat bounce situation going on here. There's no major volume around. This market still too expensive given the bubble that it actually put in place, and would need to come back a bit more. And the market is waiting for large funds, corporate funds and institution funds to come into this market, but these organizations are waiting for more regulation and regulating themselves. Coinbase now have an index and a fund that's going to be launched. Well, I think it launched last month as well. I'm not really up to speed on those sort of things, but that's why you've got this consolidation phase. You've got the bubble that burst, and also the institutions waiting for the green light, as it were, of regulation to get into the market. Right, that will do it for this morning. If there's anything to report, I will let you know. Other than that, as ever, thanks for watching. See you in the next one.